Hi. Welcome everybody to our webinar on the Pune warehouse opportunity. So just Samir, I'm audible, right?
Yes, you are.
Great, thanks, Samir. So great to have everyone here, and I think it's everyone, all our investors have been waiting. It's the first webinar that we're having in a while with regards to a property. And I think we've been very particular, very curative on the kind of properties that we bring on our platform, and we're very excited with the contours of this proposition, which we'll take you through. Before that, would also like to introduce Samir. We introduced Samir a month or so ago when we had our last webinar on the general smart investor, but for a lot of investors over here would want to introduce Samir, who's joined us as CFO. Samir joins us with a wealth of experience. He's a chartered accountant and an IIM Ahmedabad graduate. And he spent 30 years in banking in Mumbai, Hong Kong, and Singapore. He's worked at Bank of America, UBS, JP Morgan, and last 13 years at Nomura, where he was most recently co-heading global sales. So would like to welcome Samir on board, and overall the team HBIT's team has also been scaling as we would like to present our investors with a lot new opportunities. So without further ado, jumping right into the details of this opportunity that we have. It's a warehouse based in Pune. So this warehouse, it's what are the major contours of this warehouse that makes it a very attractive proposition to invest in? Well, firstly, it's in Talegaon. Talegaon is one of the fastest growing warehousing hubs, not only in Pune but also in India. There are a lot of auto ancillary companies that want warehouses here, a lot of industrial companies that want warehouses, e-commerce, 3PL logistics. And Talegaon is the place to be in Pune. We're just a kilometer away from the Blackstone Hiranandani joint venture, which is a 250 acre land parcel that has over 6 million square feet of warehousing development that's coming up. So the overall infrastructure and ecosystem in Talegaon, is rapidly growing. There are paved roads, very modern infrastructure, water supply, electricity. So a lot of infrastructure development, makes it a very attractive warehousing hub. Our rental is a very attractive rental. It's 18% below the average market rental, which leads to a lower acquisition price, which I'll touch upon later in the presentation. Have a very attractive 9% entry yield. And our tenant is the largest automaker in the US, General Motors. We're expecting an IRR of 14+%. It's a 5-year agreement period, and our minimum investment size is 25 lakh. The total size of the investment opportunity is approximately 40 CR. So I'll let Samir touch upon, the overall Indian economy and where warehousing fits into that before jumping into the details of the asset.
Thank you. I guess it's very important to understand when you're investing in any asset class, how the economy is really doing. So obviously the Indian economy, IMF recently came out with saying that the economy is expected to grow 6 to 7%. Obviously production has bounced back very strongly from the COVID era. And I think there's a huge demand in the country across production, across consumers. It is considered to be one of the fastest growing economies. As I mentioned earlier, IMF said 6.8%. If you compare to the other economies across the globe, India is still considered one of the fastest growing, even higher than China. So today, if you look at the economy, it's the 5th largest economy behind US, China, Japan, and Germany. And I guess what's very interesting is if you look at the markets around in different asset classes. So if you look at the equities market, the US S&P 500 is down almost 23% this year to date, whereas the Nifty 50 is down only 5.5, 6%, which shows a lot about the resilience about the Indian economy. I hear various times that, oh, the rupee has depreciated a lot. So yes, the rupee has depreciated year to date around 10.5%. But if you really compare it to, let's look at the other currencies. For example, Japan. Yen has actually depreciated 27% against the US dollar. The euro has depreciated 15% against the US dollar. The Chinese yuan has depreciated 12.7%, and the sterling has depreciated 19%. Again, this has really happened because obviously the US dollar has continued to strengthen. But as compared to the other, even developed economies, the India FX has actually done much, much better. So overall, I would say the economy is in very good shape. As I had pointed out last time in the webinar, I think the central bank is doing an amazing job making sure that inflation is in control. Obviously, the hiking cycle is still on, but definitely I think the central bank's done an amazing job. Now, if I straight away go into the Indian warehousing market, I do think this is one sector which will continue to grow very, very aggressively. Right now, we have roughly 307 million square feet. This is expected by 2025 to grow to 500 million square feet. And I guess the main reason for this being, obviously, digital is playing a very, very important part. Logistics is playing an extremely important part. And all the big players like Amazon, Flipkart are using very large warehouses. And is this actually going to stop? I actually don't think so. In fact, this is for the next few years, I would say 5 to 10 years, it's actually going to accelerate even more, which basically means that the demand for the warehousing market is not going to slow down at all. And we do expect this to keep growing substantially. So as an asset class, if you see, I think it's probably one of the most resilient asset classes, whether you compare it to commercial office space, whether you compare it to data centers. I do think the warehousing market is probably the most resilient, and the chances of capital appreciation, I think, are going to be maximum. And specifically for this asset, I'll in fact pass it on to Shiv later, where we actually think the capital appreciation could even be more than what we have projected of 14.4%. So why don't I stop there and pass it on to Shiv to talk specifically around the asset?
Yeah, so jumping into the contours of the asset, and just before that, we've seen how the warehousing rentals have also expected to increase across India in Grade A and Grade B warehouse. So to talk specifically about the asset, firstly, this warehouse is built to Grade A specifications. General Motors, being the tenant, has obviously done their own due diligence to take up such a warehouse. It's built on freehold land. It's 5 acres of freehold land. And this is a very important point in a warehouse acquisition. Obviously, there are warehouses that are part of a larger industrial park where there are other co-owners. But what freehold land does is it gives the owners the opportunity to really participate in the capital appreciation of the land. Say the Pune city further develops, the same way, for instance, 20, 30, 40 years ago in Mumbai, you had industrial areas in Vikhroli, in Mulund, which have now become residential areas. We see the same happening at some point in the future in Talegaon, which really leads to massive capital appreciation. So that value can be captured on a much easier basis if there's freehold land. And over and above that, this is not an MIDC land, so there are no transfer charges if and when the land needs to be transferred, which makes it a very lucrative buy. Obviously, it serves as General Motors All India and export storage facilities, and it's supplying the spare parts to the entire Chevrolet network, both in India and outside India. And location of the warehouse has excellent connectivity, which I'll come into a little bit later, as well as a 5% year-on-year escalation with this tenant. The warehouse itself is 120,000 square feet of built-up area, basically 200 meters by 45 meters. Is the carpet area. You can see the floor plan and the layout here. There's 10 meters clear height. There's provision for 2 10-ton cranes in 2 different bays. And what makes this, again, a very exciting acquisition, this specific asset, is that it's a ready asset. It's not an under construction asset. The asset was constructed, completion certificate was received in November 2020, which is when the tenant General Motors started occupying it. So it's been 2 years. But yeah, it's a completed asset. It's not another opportunity where a lot of the assets are under construction, where the construction risk is still in place. There's no construction risk. The asset is already in place. What again makes it lucrative is that it's a very clean layout. So any sort of tenant can really occupy this space from a storage angle, whether it's an auto ancillary parts company, auto company, 3PL logistics company, e-commerce company. It's a very clean layout and makes it flexible for multi-uses from a long-term perspective. So in very attractive, in terms of very clean grade A specifications of this asset. Here are a few of the photos, which obviously I think a lot of the investors have gone through because this presentation has been shared. There are a few photos before it was occupied by the tenant, a few after, and a few outside images as well. To talk a little bit more about the licensee, don't need much introduction to General Motors, obviously. The largest American auto company and the fourth largest in the world. They have several brands under them, whether it's Buick, Opel, Chevrolet, GMC, Cadillac. Market cap is about $58 billion, revenue of $12 billion, 1.5 lakh employees. So obviously a very, very stable tenant from a payment perspective. With regards to this specific asset, obviously General Motors is using it in terms of storage for their service and spare parts for their entire Chevrolet network. And they are supplying not only to the India network, but also the export global network. And we've spoken to General Motor officials before acquiring this asset. And they've committed that they're going to be there until 2030 because that's their mandate. They have to be there for 10 years post their last car that's sold. So till 2030, we have visibility. In fact, they've taken this space up only in November 2020, and they want to be there for 10 years. That's their intent. So talk a little bit more about location, right? Because this is one of the most important components of this specific investment or any real estate investment, but specifically this investment. So we're in Talegaon, which is close proximity to Chakan. So Talegaon is one of the fastest growing warehousing destinations. Chakan rentals are at about 30 plus rupees per square feet from a warehouse perspective. Talegaon is at about 25 rupees per square feet. And I'll take everyone through the slide where we look at all the other comparable rentals in the market. Our asset is at 21 rupees. So already at an 18% discount, which makes it very attractive because we're able to, if and when the tenant needs, we're able to raise the rental and get a higher yield. There's already 33 million square feet of supply in the Pune micro market. And we're expecting 60 million square feet to come up by 2025. So again, a very attractive micro market to invest in, which is why also Blackstone Hiranandani is investing 2,500 crore to develop 12 million square feet of warehouses across 3 cities. But half of that is in Talegaon with 250 acres of land parcel and 6 million square feet. And the market is such a situation right now that if there's a tenant as of today, and they want warehousing space in Talegaon, there's no empty shed, there's no empty warehouse available. So the market is such that as of now, tenants are approaching developers to construct land. So any fresh warehouse is at least 12 months away. So it makes it a very attractive proposition, and at our entry price, even more attractive. So here's a map showing, where our warehouse is located. It's about 10 kilometers away from the Mumbai-Pune highway. And the major locations here to note are Chinchwad railway station, as well as JNPT seaport, because this is where either rail or port transportation happens. And whether your tenant currently, it's an auto company, but even whether it becomes a 3PL logistics company, an e-commerce company, this location makes it very, very important. And it has great connectivity to Chinchwad railway station, as well as JNPT seaport, among other things, including your Pimpri Chinchwad industrial area, Navi Mumbai, Mumbai International Airport, But the main points to note here, JNPT Seaport and the Chinchwad railway station. So again, a lot of other attractive tenants also in this micro market, a lot of MNCs, Bridgestone, Volkswagen, IKEA, Philips, not mentioned on this slide, but the next slide, Amazon, stellar value chain. So again, across the board in terms of the tenant mix that can be used for this warehouse. If we look at the average rentals in this area, it's about 25.44 rupees per square feet, while we are at slightly less than 21 rupees per square feet. So an 18% discount to the market rental, which makes it, which allows us to mark to market and also pick it up at a lower per square feet rate, a lower capital value than what's being provided in the market today. So to talk about the numbers, tenant is General Motors, term is 5 years. There's a 5% year-on-year escalation. Again, 1.2 lakh square feet of area, 21 rupees or 20.95 rupees rent per month. 3 lakh annual rental and 68 lakh is the security deposit. I think the important point on this slide is the cost of premises. Again, I've been mentioning, we're at a lower than market rental, and therefore we have a lower than market capital value. We're picking up this premises at rupees 2,962 per square feet. We've received a valuation report from JLL that prices this asset at 3,600 rupees per square feet. So even from a JLL perspective, we're at a discount at the market rate. And we see massive upside potential in terms of not only the consistent rental yield that we'll get, but also the capital appreciation. To talk about the breakup of the various components, there's the cost of the premises, there's the stamp duty, which is 6%. There's the property tax for 3 years, which we're collecting in advance. There's the legal fees of 12 lakh. We work with Shatul Amarchand Mangaldas, one of the top lawyers in the country, from a title and due diligence perspective. Our admin expenses, this is basically for operating the SPV for a 5-year period. Pay our independent directors, the audit, the statutory compliance of the SPV is 33 lakh. There's an acquisition fee of 1.2 CR, and then we keep reserves of 60 lakh for any unforeseen contingencies. This is the cash flow. So year one, the rental yield is 9%. We're offering a 1.5% rent top up. That offer expires on 25th October. So the cash flow includes obviously the rent from the tenant, the rent top up, as well as interest on security deposits and reserves. So a few of the sensitivities, obviously we've projected a 6.5% appreciation where we'll expect about a 14.41% IRR. But what's important to note over here is cost of construction of a warehouse, a fresh warehouse coming into the market today. Today's cost of construction, as per a Savills report, is 2,100 rupees per square feet. Land prices have anyways appreciated because of the massive demand in warehousing. So really, we're expecting good capital appreciation on this specific warehouse, given the location as well as given the price that we're picking it up at. But if we can observe, even at a 6% capital appreciation, we get a 14% IRR at an 8% capital appreciation, approximately a 16% IRR. In terms of the terms that we have, we charge a 1% yearly management fee, as well as a performance fee of 10% over an 8% hurdle rate. So yeah, that's a quick overview of this proposition. Again, to cover the major points, grade A tenant, the 9+% entry yield, 14% IRR, 5% yearly escalation. It's located in Talegaon, and it's a 5-year agreement. So we'll open it up to questions that anyone had. I think we've already had a few questions that have come in. So I think there's a question on how are you able to assess, get the asset at a rental 18% below market rate. So the reason we're able to get it at an 18% below market rate is that the rental is at an 18% below market rate. And then we sign it up with the seller of the asset for the market yield of 9%. why is the seller was leasing it out at an 18% below market rate? So obviously the developer has his own financial constraints. They want to invest in new land. So they're willing to, rent it out quickly and invest their monies into new land and new acquisition and growth. There's a question on General Motors and the lock-in as they're winding up their India operations. So we have a 6-month notice. General Motors, though, has committed for 10 years. So General Motors stopped exporting in 2020. They stopped their India operations or manufacturing in 2017. Yet they've signed up this warehouse in November 2020 after both those things. Reason being is they require this warehouse and they need to provide service and spare parts for 10 years post the last manufacturer operations. And we've spoken to GM officials as well. Their intent is to be there until 2030. And it's also a statutory commitment that they need to provide spare parts for 10 years post their last car sold. What is an acquisition fee? Acquisition fee is the acquisition fee that we charge for all the work that we do in terms of acquiring the asset from the developer, all the paperwork, the presentation, the due diligence. That's the acquisition fee that we charge. There's a question, can you explain more on rent top-up? And is the 25th October for entire funding or initial 5%? So rent top-up is something that we offer to our early investors who come on before 25th October. It's basically a rebate on the management fees of 1.5% spread across the first 3 years. Details are present in the financial model. But the 25th October deadline is just for the initial 5%. What are the risks in this? So obviously every investment does have certain risk, but we mitigate it in various ways. In this specific, so the thing to look out for is the per square feet rate that we're acquiring this asset at. And again, that's below the market, and therefore that mitigates a lot of the risks. Other is if and when the tenant leaves, we have 6-month notice to release the asset. And right now, Talegaon market is very, very hot. There's not that much land. There's not that many warehouses that are available. Will the asset be sold and money returned to investors after 5 years? So we start looking, obviously this is a long-term investment. That's when we really get the capital appreciation. We start looking for an exit in 4 years period. After 4 years, when we've seen escalations and capital appreciation. At that point, we go into the market and get proposals. But every asset, ultimately, it's up to majority of the investors to decide if or not they want to exit. And so we come to the investors with proposals, and then the investors decide that they want to exit. We've already done this once. We've exited one of our first assets for a 17.5% IRR. So it's a set process that we have in place. What is the exit strategy if investor wants to exit in, for example, 2 years? So one is that, we can exit on the platform. There are other buyers that come onto the platform. Investors are able to exit their share. Obviously, 2 years, we might not see significant capital appreciation. We recommend a longer term investment. But yes, there are cases where people have emergencies where they need to exit. And we have given exit to a few individuals in the past. And Samir, if you want to touch upon this a little bit more as well.
Sure. In fact, what we plan to do also going forward, say 18 months down the road, to provide liquidity to our investors, be there to buy up to a certain amount. And that's really, a lot of investors might compare them to public REITs and then say that, if I need liquidity, if I have a medical emergency, can I get out anytime? Absolutely. We will be there as HBITs to provide liquidity. It's not about making money for us. It's just helping our investors exit when they need to. And this we'll start providing after 18 months.
There's a question, what will be the square feet ownership in 25 lakh? So to touch a little bit more upon the structure, there's an SPV, a special purpose vehicle, in this case, a private limited company that's created to own the asset. And investors get shares and CCDs, CCDs being in that private limited company as per the ratio that they've invested in. So on a monthly basis, whatever rental flows into the private limited company is paid out as interest in CCD to that investor. So that's the structure of ownership. So there's not square feet ownership. You get a share in the private limited company. What's the minimum lock-in period for investment? So there's no lock-in per se, as Samir and I just mentioned. In 18 months, we're planning to give investors a liquidity option, but otherwise you can exit your share on the platform at any point in time, subject to a buyer being there. What is the net return to the investor post fees? What is the taxation to the investors? So post fees, we charge a 1% management fee on a yearly basis. So whatever the yield is, you can subtract 1% from that. So in the first year, the net yield will be 8%. What is the taxation to the investors? That's as per the investors tax bracket. Vipin, we can, one of our investment managers can reach out to you and discuss with you your tax situation. I'm already invested with HBits. Is there any discount for existing customers? So we obviously have the rent top up that's applicable until October 25th. How is the rental yield is calculated? The rent is about 3 CR on 40 CR property. Rental yield is calculated including the rent top up that we offer, as well as the interest in security deposit. So this is again a question on rent top up. So rent top up effectively is for the first 3 years, we reduce our management fees to the investors to enhance their yield. This is only for the early bird investors who close before October 25th. Any support for redemption of 25 lakh? I think Samir and I have answered this question. Will it be ownership transfer or issuance of share certificates? So this is a new SPV that's created. So it's a private placement whereby which investors get fresh issue of shares. You said the cost of construction is 2,100. So 2,100 is the cost of construction in general in today's market, given inflation that's happened in the last couple of years, specifically on steel prices and commodity prices. Samir, you want to talk a little bit more on how the steel price have increased? And there's a Savills report, there's an Economic Times article that verifies this. But plus being in the industry, we know that this is the cost of construction as of today.
Sure. So just to add, cost of construction has been going up, right? And given COVID situation, there's been a lot of supply issues, which has really pushed commodity prices up. And that's really the reason why over the last, I would say, few years, even warehouse construction costs have gone up by 10 to 15%. We honestly don't think this is going to really come down. The supply chain issues with what's happening in China still following a COVID zero policy, I think these will actually continue. So I would not be surprised if cost of construction continues to go up just given where inflation is.
So there's a question, wasn't able to understand slide about year zero. Does that mean we don't get anything in year zero? But that's just a way of presenting it. So year zero is when the investor comes in, we're expecting first week of December. And then post that, year one is everything that follows post that. So there is the rental income in year one. So from month one, there will be rental income. What is the potential exit options? We've discussed that. What happens if HBits goes out of business? So one is we don't expect that to happen. We have some great investors already on board. In fact, we're growing very rapidly. We'd raised a round a few months ago. We have investors like Nirmal Jain, who's the IIFL founder. Ambit Family Office is invested. So we have some great investors who invested. But theoretically, even that, if that were to happen, the investors control the SPV. They're independent directors who are on the board of the SPV, and the investors can appoint a new property management. So effectively, the investors control the property and the asset. But we don't expect that to happen, and we're growing very rapidly. By when will the structure be ready, and what's the minimum investment and lock-in criteria? So we answered on the lock-in criteria. Minimum investment is 25 lakh, and we're as soon as the asset is funded, that's happening very quickly. We're already over 20% funded, and there's a lot of investors who are coming in, a lot of queries. So in the next few weeks, we'll be probably fully funded.
And I guess there's no lock-in criteria as such.
There's no lock-in, yeah. IRR is including rental or on top of it. IRR includes the rental. So IRR is a combination of whatever rental the investors are receiving, as well as the capital appreciation. Want to ask about your company and how long have you been in business? So HBITS, we've been in business for now 2.5, 3 years. We've done about 200 crore in assets. But from a commercial real estate background perspective, we have 30 plus years of experience in commercial real estate, in leasing to MNC tenants. And then Samir comes with his own wealth of experience, who's effectively joined as our CFO in terms of his banking background, where he brings a wealth of experience in as well. Say if I invest 25 lakh, how much rent can I expect, and growth as well? So effectively 9% will be the first year's rent, the interest income from the rental that you can expect, and then probably 6.5% capital appreciation year on year. Plus acres, freehold land.
I think Shiv, you broke up. Can you just repeat that again?
Yeah, so land is 5 acres plus, and the warehouse is 120,000 square feet. So there's a question, why are we entering post lock-in if discount is close to 18%, expecting 6% appreciation for 3 years means you envisage no appreciation for first 3 years. So, lock-in ultimately is just on paper. And various companies have their mandate as to what lock-in they can give, what lock-in they can't give. Ultimately, you have to look at the rental that you're entering at, the per square feet rate, and what the intent of the tenant is. So in this case, intent of the tenant, they need to be there for 10 plus years. We're expecting 6%. If we're offering discount of 18%, then we expect 6% appreciation for the first 3 years, means no appreciation for the first 3 years. Yes, we're obviously very conservative on what we project because we want to make sure that we deliver our returns to the investors. It's possible that the appreciation can be even higher. In fact, rentals in that market are going at 25, 26 rupees per square feet. So we do see that huge mark-to-market opportunity and at good capital appreciation potential. The lock-in is still 25 since the rent is below average. Will you look for new tenant to match with the market rates? Nizam, that's exactly what we intend to do. Post 2025, either with the same tenant, we'll renegotiate a higher rental. But we're very confident that if not with them, we'll be able to get another tenant. But even with that tenant, we'll be able to negotiate a higher rental. Do you have any working, from Lynette, do you have any working to show how much to invest? What is total cost and what is the return? Yes, Lynette, we do have a working. There's a full Google Drive, which includes the valuation report, the financial model as well, where you can play around with your investment amount. So our investment manager will reach out to you with that working so you can have a look at the Excel sheet. What is the investment structure for this opportunity? So it's a private limited entity that's investing. It's not an LLP.
And what is the security for the stocks? The actual property is the security for the stocks.
So Milan asked the question, the status of approach roads, water, electricity. So exactly, this is a very, very established industrial and warehouse area. There's an MIDC right close to it. We're not an MIDC though. There's a very concrete paved road, and abundant water and electricity supply. What is the current market per square feet rate for acquisition? We're acquiring at 2,962 rupees. Is the asset sale transaction tax-free in the hands of the SPV and only taxable in the hands of the investors? So there is stamp duty that is paid when we acquire the asset, but that's baked into the 40 CR, out of which 6% of that is stamp duty. Can you give an overview of HBITS assets? So I think we covered that a little bit, but also in terms of future plans, there's a question. We're currently at 200 crore AUM. We're looking to touch 1,000 crore in the next 1 year, and then 10,000 crore in the next 3 to 5 years. We're looking at offices, warehouses, data centers. At some point, we even might get schools and hospitals on the platform. And we're looking across the top 6 cities. So Mumbai, Pune, Bangalore, Hyderabad, Chennai, and NCR. Can you share an example of 2 CR investment? What is monthly rental? Again, we'll be sharing out the Google Drive link, which contains a financial model to all the investors after the presentation.
And just to add, there is no exit load. So when you actually sell, there won't be an exit load as such. Only we have a 10% return over 8% when you exit the full asset. But if you exit your share, there will not be any exit load.
So there's a question, someone has not understood the CCD. So CCD is a compulsory convertible debenture. So what that means is that whatever amount the investor is investing, they're investing 10% in the equity, 90% in the CCD. Reason for that structure is whatever rent comes into the private limited company, the most tax efficient way of paying that out is as interest in CCD, because then the private limited entity becomes tax free because there's zero profit because it's paid out as an interest expense. There's another question on taxation for an individual investor. That depends on the investor's own tax situation, but we can guide you on the same. Our investment managers can guide you on the same.
So one more question: who are the investors in HBIDs? The company not specific, the SPV. The investors are like Shiv said. We have people like Nirmal Jain who invested. We've got ex-VC of Jungle Ventures who's invested. The Ambit family office has invested. A lot of bankers have actually invested. So we have angel investors, around 45 angel investors in the company.
We have heads of IPCs as well. Ramesh Nair, who's the head of Colliers, ex-head of JLL. There are a few other IPC managing directors from JLL, Colliers, Cushman, who've invested as well. So we have great insights through them on the real estate market as well. For NRI investors, what are the tax implications? Are there any TDS applicable for NRIs? Yes, there is TDS for NRIs, but if you get a tax residency certificate and you provide that for us, and there's a double tax agreement between your country where you're residing and India, then there's a lower TDS rate. So Ashish, we can answer your query specifically as well. Our investment managers can be in touch with you.
Shiv, there's a question around documentation, some light on the documentation.
So the way the process works, if you're interested, in this opportunity, then you'll sign the expression of interest, at which point you'll put in 5% of the amount that you wanted to invest in. And then once we have all the investors, probably in the next few weeks, we'll collect the remaining 95%, and there'll be a private placement form, at which point you as an investor will become a shareholder and CCD holder in that private limited company. So it's a two-step process: the expression of interest and then the pass for or private placement form. I think a lot of these questions we've covered. Can you explain more on how the 9-10-90-10 model of CCD, how it saves tax? I think we've covered this, but it saves tax because whatever rent that's paid out to the investors, there are two options: either to pay out as dividend, but then there's dividend distribution tax, and the company then becomes a profit-making company, or paid out as interest expense. So that's an expense, and so whatever revenue is coming in is paid out as an expense, so the company becomes zero tax, and that's why we have the CCD model. What is brokerage offered for brokers? Milind, our team will reach out to you for the same as well. What was the hurdle rate and performance fee? So hurdle rate is 8%, and performance fee is 10% on that. So basically on exit, whatever earnings the investors make above 8%, we charge a 10% fee, which becomes a nominal amount on the IRR. Is there any scenario in which my investment can be completely wiped out? Sameer, do you want to cover this? Given that right now the main value is in land. Sameer, do you want to?
So firstly, any investor gets rental income, even if you assume 8% for say 5 years. So you will obviously get 8% per annum, so you'll get around 40%. Also, it's backed by this asset. This asset, which is close to 3 acres, lies on a 5.3 acre land. And land, as we've seen, normally doesn't depreciate firstly, and will definitely not go to zero. We've done all the due diligence around the land. It's clean, everything we've done. So I would say it's almost impossible for you to really lose money on this investment. Yes, it's possible that you don't earn 15% IRR, maybe you earn less. That's definitely possible if we get the capital gain story wrong, which also I think is very, very highly unlikely.
The question on want to know more about the founders of HBITS. So a little bit background on myself. We are based in Mumbai. You can in fact come drop by here, visit us at our office. I've done my education outside India. Studied physics at Stanford, did my MBA at Harvard. I've also worked briefly in finance, worked in Stanford Management Company as well as Citibank. I've worked in real estate development in India. So that's a little bit on my background. Samir, I think I'd introduce Samir, but Samir again is a banker, 30 plus years of experience, chartered accountant, and I am Ahmedabad graduate. Most recently, he was co-heading global sales at Nomura, based in Singapore. Currently, how many investors are already invested? So out of the 40 CR, where we've as of a few days ago, we're at 8 crore plus. In the last few days, we've gotten a few more investors as well.
Yeah, one more question around the tenure. Can one stay invested till 10 years? Yes, you can. I think that's the maximum period of the CCD. You can stay invested for 10 years.
So ultimately, it's up to the group of investors if they want to exit or not exit. There's a question on how is this different from investing in REITs? So REIT is a basket of assets. It's like investing in a mutual fund. The asset selection is up to the fund manager. You don't really know, that probably 100 tenants that you're investing in. Here in fractional ownership, you can pick and choose which asset you're investing in. You can curate your own portfolio depending on your preference. And even the transparency and visibility over here is much higher. Here you're able to see the leave and license agreement. You're able to study the numbers in detail. And then you're really able to capture the appreciation in that specific asset.
I guess one more point to add to what Shiv mentioned, typically in REITs, and especially if you see in developed markets, they move with the equity markets. So for example, the equity markets are down in the US by 25%. REITs have also fallen quite a lot. What we are trying to do is more like a private REIT, where the valuation actually doesn't fall, but as the value of the asset goes up, the net asset value actually goes up. So this is more stable as compared to a public REIT.
There's a question from Jigar. Can HBITS avail LRD loan to enhance returns? So we would not like to put a loan on the property because a lot of our investors like the monthly rental income that's coming on a monthly basis. Otherwise, the interest income gets paid into paying the loan amount. So we don't have a loan on the property. You're just investing in that property. The question, someone has invested their money through a channel partner. Would they get more benefit if I could invest directly? No, it's the same, whichever route you come. We treat all our investors the same. How many successful investments raised by HBITS till now, and what is the performance? So we've done approximately 200 crore in AUM across 9 different properties. To give a few examples, one property we exited at a 17.5% IRR. There's another property, which is our ICICI Bank property, where ICICI Bank is the tenant. So to touch upon that, that was again a capital appreciation story. We acquired it last May 2021. We acquired that at a per square feet rate of 11,661 rupees per square feet. Tenant being ICICI Bank. Again, great tenant, great per square feet rate. A few months ago, just a year after we acquired that asset, in that same building, there's been a transaction at approximately 15,000 rupees per square feet. So in a year, that's the kind of appreciation that we've seen in that building. And I think that's where our asset selection strategy does come in. It was to see our project on the poster of today's talk session. We are the architects and planners of the facility. Great. Good to have you here. With a huge 250-acre green base coming, will this investment lose value? No, it's exactly the opposite. This is how warehousing ecosystems are built. And Samir, you want to talk a little bit more on this?
Yeah, so basically, I think Hiranandani had announced, I think in 2018, when they had acquired 250 acres there. So it's basically building the ecosystem, right? The way warehousing works is you've got to build the ecosystem around it, whether it's the roads, whether it's the infrastructure. And the more land is, more warehouses are built, the actual value of around that investment actually goes up. So I'm honestly extremely, extremely bullish around specifically the space which we are acquiring, and I do think that the appreciation could be quite huge.
Why is the built-up space only 52% of the land area? So generally the FSI for warehousing is 0.5%, but over and above that, you need open land for the trucks to move in and out of the warehouse area. What is the net rent in hand of investors per month? Again, that depends on the total amount the investor invests, but we'll share the financial model with you so you can put in your amount and see the net returns that's coming to the investors. Considering inflation, don't you think 9% yield is less? So we are seeing inflation, but what inflation also does is it again leads to a higher cost of construction, which leads to rental increase. So again, we'll be able to mark to market our rental as inflation increases, which will make the yield higher. Over and above that, it allows for fewer new supply to come in because the cost of that additional supply is much higher, which allows us to see a more higher capital appreciation as well. So is there any regulatory body for controlling such transactions? So we are a RERA registered agent, and obviously because it's a private placement, we're governed by all the Company Act regulations. Also, all funds are always routed through escrow. We as HPITs never touch the funds. We have an escrow account with ICICI Bank. Universal Trusteeship is a trustee that's in charge of the escrow. Legal due diligence is done by Shardul Amarchand Mangaldas. The whole structure we worked with Deloitte to come up with. Valuation is done by JLL. So we work with the top companies at every part of the process. What is the potential exit price you're expecting after 3 to 4 years? So we expect about a 6.5% capital appreciation year on year. JLL again has already given us a 3,600 rupees per square feet value as of today. Rentals are already 21 rupees for this warehouse. Talegaon is at 25, 26 rupees. Chakan is at 30 rupees per square feet, which is a slightly more developed market. So what we can expect, in 3 to 4 years, even if we reach say 28 rupees in rental, and we capitalize it at today's 8% yield, we can get a per square feet rate of above 4,000 rupees. So a few of the questions are repeating. What is the exact location of the property? It's an anonymous question. We can reach out to you and give you this location with the Google Map pin. But basically, it's 10 kilometers on the Talegaon MIDC road, and it's about a kilometer away from the Blackstone Hiranandani development.
Shiv, there's a question of around insurance also.
Is there any insurance coverage? Yes, we will be insuring the property. We do insure the properties.
Yeah.
Send us the Google sheet for the investment and rental yield, Amit Jain. Absolutely. Yogesh, I can be co-owner of the property. Yes, absolutely. Any natural disaster risk? Flood, earthquake? Exactly. That's why we insure the property, Arvind. Who are you purchasing the asset from? So asset is being purchased from a very strong developer called Vivan Group. They have 2 million square feet of warehouses across Pune and Nasik. And along with General Motors, in their other warehouses, they have some other strong tenants as well, including Grofers, including Zomato. So a lot of other MNC tenants they have as well.
There's also a question, does the higher stakeholder control the property? Imagine someone pays 20 crores and rest pay 25 lakhs each. So basically what happens is obviously we manage the property for our owners. So we want to be fair to every owner. So anytime we get a buyer for our property, we obviously show it to people. 75 people have to say yes to sell. But yes, if someone has a very large stake in it, obviously we'll definitely take that into account and talk to people fairly.
Who will be the board of directors for the SPV? So we have independent board of directors, they're professionals, they're chartered accountants. What is the projection date for rental distribution? So as per the Excel sheet, we projected it from December onwards. Do you buy fully constructed warehouse or do you buy land? This is a fully constructed warehouse. It's already rented out. Will I get share certificates or will it come into my DMAT account? So we work with physical share certificates. We faced a lot of challenges with DMAT accounts in the past. I believe you're not participating as investors, being asset managers. What's the need of big angel investors? So we're growing our team from an asset management perspective, from a lease management perspective. We want to acquire new properties to present to our investors. And we want to invest heavily also into technology to make it easy for the investors to transact. That is why we're raising our angel investors. Can investors visit the asset and take a tour, Tushar? So definitely from outside, the asset is visible. We can share the link with you. You can definitely visit the asset. In fact, we highly recommend it because you get a good idea into what kind of infrastructure development is happening in that micro market. Again, Ninad, same question. Can we physically visit the property? How are you different from other players who are doing something similar? So, we differentiate ourselves on our real estate strategy. We're very, very particular on the kind of properties that we bring on board our platform, which is why we've not even listed a property in a while, because we want to select the best properties for our investors. So also in terms of asset acquisition, I've already mentioned how few of our properties have done. Even in terms of rental connection as well as lease relationships, given that we have 30 plus years of experience in commercial real estate, we have great relations with all the real estate heads, admin heads, HR heads of a lot of corporates, a lot of MNCs. That is very important when you're leasing out a property, when you need to lease out a property again. And that's what we have given our experience in commercial real estate. We also have great connect with, JLLs, Colliers, Cushmans of the world, as well as a lot of brokers that go into leasing out a property. And we're one of the only players that have actually exited a property as well. Any expenses to be incurred at the time of sale of the asset? So depending on the situation, there might be expenses, but we consider the net amount to the investor anyways. What's the beta for an investment of this nature and how do you hedge this from Satyam? So what we've seen in terms of commercial real estate investment, and exactly what Samir mentioned, this is not a REIT investment, this is a direct commercial real estate investment. There's very low correlation with the stock market. And we've seen that, we've seen that in Western markets, we've seen that in India, which is why people do diversify into commercial real estate, because they're getting the rental income, they're getting the capital appreciation, and yet it's not correlated with stock market. Hi Shiv, on LRD, further clarification, will there be a clause that no loan will be taken by the SPV? So as per the articles of association of the SPV, any loan requires 75% consent of the investors.
And another one, can a loan be taken for this property on a buyer's end? Absolutely. If you would like to take a loan for your share, absolutely, you can go ahead.
You can go with your own personal banker and take a loan. If there's a discount in terms of purchase rate and rent, you may get a relatively less selling price from Pranav Shrimal. So because we're seeing good appreciation in the Talegaon asset, we're able to market the asset when the agreement expires and fetch a higher rental. We don't expect to see a lesser selling price.
There's a question by Ahmed, does the CEO and CFO also invest in these properties where HBITs invest? Absolutely. When we like the property and when we have surplus cash, absolutely. I'm always looking for good properties.
Is 2962 inclusive of construction cost? So 2962 is the overall cost that we bought the asset from the seller from.
So a
Shekhar,
question from Atul around the cash component. We don't consider cash component at all. This is
We don't deal in cash.
pure check. We don't deal in cash.
At the time of renewal, the increased rate of rent will be dispersed to the investors. This is a question from Ravindra. Absolutely, Ravindra. This is exactly what makes it an attractive investment. And the increased rental is distributed to the investors. Again, a question from Vishal, can we visit the site? Yes, definitely you can visit the site. Is SPV already the owner of the property, or is it yet to be transferred? So SPV is not the owner of the property. Once the investors come in, that's when we transfer the property to the SPV. Kushagra, how much rent top-up is available? It's 1.5% until 25th October. Again, on site tour. Can you confirm that return on your previous assets are in line with what you projected? Yes, very much in line. We gave a few examples of the ICICI asset as well as the 17.5% exit. Any registration to be done like normal properties? Yes, which is where we come in, we do all that work. For the investors, it's completely online, it's completely seamless. At exit, will long-term index capital gains be applicable to investors? If it's above 3 years, yes, it will be long-term capital gains, which makes it a very attractive proposition. Question from Abhirup, investor in ICICI asset. Yes, there was a transaction that happened in that same building at 15,000 rupees per square feet. But beta is anything for carries a risk from Satyam. Does this carry a risk? All investments do carry a risk. The question is how we mitigate the risk. And which is where we look at it, we purchase it at a lower rental so we can easily lease it out. We have a long notice period from the tenant. We make sure it's a very attractive micro market to invest in. That's how we mitigate those risks. Who is the custodian of the property documents? So property documents are given to the trustee to store once we acquire the property. Satyam, can someone send the details of the property? Yes, we will share with you all the details of the property. What is the deadline for you to close the asset? What if it is not 100% funded by then? We don't expect that given the traction that we're having. In fact, we've seen so much interest in the last few days. We've just launched about a week ago. So we expect to close it in the next few weeks. What is the number of equity shares and CCDs that will be credited into our account if you invest 25 lakh? So the face value of each share, 10 rupees, we'll divide that, and that is the number of shares that you get. Why the previous owner left the property? The previous owner is the developer. Their business is not to earn rental income. Their business is to acquire land, build warehouses, rent it out to tenants, sell, and then buy new land. That's a normal course of their business. I think with this, Samir, we've reached our time limit. There are a lot of questions, but any further questions, you can always reach out to us online. You can email us. You can drop by at our office. So do reach out to us.
One last question is there by Jigar. How old is the property? It's a 2-year property. It was constructed in 2020 end.
And this is the first tenant.
Yeah. Okay. Thank you so much. Thank you.
Thank you, everyone.
Thank you, everyone.